Trial balance is not an account, it is a statement which is prepared in order to check the accuracy of ledger account balances. In this chapter, you are going to learn the two important basic financial statements, that is trading profit and loss account and balance sheet of the firm. If the profitability is proper or if the profitability is more, then it is always understood that creditors will have a high rate of return. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today I am going to discuss your first PUC chapter 8, that is from part B, that is Financial Statements 1. And today we are in the first session, so let us quickly begin the session. So let us see what is this financial statements and how we have to prepare this financial statement. Now moving on to the session, so let us see what is the meaning and introduction about the financial statement. So you know about it, we are going to start recording the transactions in a particular book which is called as what? Journal. So we are going to start the transactions to record in a particular book which is called as journal, where we are going to record in a chronological order. So journal is called as what? Book of original entry, where the transactions are recorded in chronological order, which means as per the date we are going to record the transactions, and there also we have a condition that we will record only those transactions which is measured in terms of money. Okay, so as and when the transactions have incurred in the business and it should be measured in terms of money, those transactions will be recorded in a particular book which is called as Book of Original Entry or Journal. So that book is journal, where the recording starts. After recording in journal, we will classify those journal entries, or classifying those entries into individual accounts based upon their nature. So individual accounts based upon their nature, so this is called as what? Ledger. So what is ledger? Ledger is called as principal book of accounting system, where the transactions are classified depending upon the nature. So in journal, we will record all type of transactions. But in ledger, depending upon the nature, we will classify those transactions from the journal and post them to individual accounts, which is called as what? Ledger. For example, all the transactions relating to purchase will be classified under one account, which is called as what? Purchasers account. In the same way, all the transactions relating to sales will be recorded in sales account. All the transactions relating to cash will be recorded in one particular account, cash account. So depending upon the nature and type, we will classify those transactions into individual accounts, which is called as what? Ledger. So after recording in ledger or after the classification, we will prepare the financial statements. So when do we prepare the financial statement? At the end of the financial year. But if you prepare at the end of the financial year, there will be so many transactions. So the bulk of the transactions is more. So what we will do? So in order to reduce the burden at the end of the financial year, we will prepare a statement in between, which is called as what? Trial balance. So which is a statement that is called as what? Trial balance. Now what is this trial balance and why we have to prepare this trial balance? So trial balance is a statement which is prepared in order to see whether our journal and ledger is correct or not. That is, the accounts what we have classified in the ledger, where the total of debit is equal to total of credit or not. So what do I mean by trial balance? Trial balance is a statement which is prepared in order to check the accuracy of ledger accounts. That is known as what? Trial balance. What is the necessity to prepare trial balance? Because as and when, after every 3 months or after every 6 months, if I prepare the trial balance to check the accuracy of ledger account, if it is correct, then I can move on with further transactions. So if it is not correct, then I have to go back again to the ledger, see that whether the transactions recorded is correct or not. So if the ledger is correct, again I'll go back to the journal, whether I have made any mistake in journal. So those checking, or in order to check the accuracy of books of account or accuracy of ledger accounts, we are going to prepare this trial balance. So trial balance is not an account, it is a statement which is prepared in order to check the accuracy of ledger account balances. So after checking the accuracy, next we will come to the end of the year where we are going to prepare this financial statements. Now what do I mean by financial statement? So it is a statement which is prepared at the end of the financial year to know the financial position as well as in order to know the profit or loss of the business organization. Till then, whole year's transactions will be recorded in journal, classify them to ledger account. Then in order to check the accuracy, we will prepare the trial balance. Then after that, we will come to the end of the financial year where we are going to prepare the financial statement. So it doesn't mean that always a financial statement should be prepared at the end of the financial year, that is for every 12 months. So your financial year can be quarterly basis where the financial statement can be prepared for every 3 months, half yearly basis for 6 months, or on an annual basis or a yearly basis, that is for 12 months. But normally every organization or most of the organization will follow the financial year, that is 1 year financial year, where it starts from 1st April to 31st March according to Companies Act 2013. Now let us see what is this financial statement. Now here in this first PUC syllabus, we are going to learn about financial statement of a sole trading concern. Okay, so let us see what are the accounts we have to prepare. What is this financial statements? Okay, so and this is a very important chapter where you can expect a 6 marks question from this chapter. Along with that, 2 marks as well as 1 mark question from this financial statements 1. Now let us see what is the meaning of financial statements. Financial statement refers to such statement which report the profitability and the financial position of the business at the end of the accounting period. So here I have told you at the end of the accounting period, which means it can be on quarterly basis, half yearly basis, or on yearly basis. Now what is this financial statement? So it is a statement which is prepared in order to know the profitability of the business. So in order to check the profit or loss of the business, whether the business is in profit or loss, as well as in order to know the financial position. Financial position means in order to know the assets and liabilities of the business at the end of the financial period. The term financial statement includes at least 2 basic statements which are as under. So what are the normal financial statement or the basic financial statement we have to prepare under, that is at the end of the financial year? So coming to the first one, income statement. So what is this income statement? It is also called as trading and profit and loss account. So this is also prepared at the end of the financial year. The 2 basic financial statements are income statement, first one. It is also called as statement of profit and loss, which shows the result of the business operations during the accounting period. So through this income statement, we will come to know the profit or loss of the business. So it is called as trading and profit and loss account, where exact gross profit or gross loss of the business as well as net profit or net loss of the business can be ascertained. Okay, so let us see later what is this trading account, what is this profit and loss account, and what is balance sheet. Okay, so time being, you remember there are 2 basic financial statements which is prepared at the end of the financial year. The first one is income statement. It is also called as statement of trading and profit and loss account. Now coming to the second statement, statement of financial position. So statement of financial position is also called as what? Balance sheet. So statement of financial position is also called as balance sheet, which tells the financial position of the business. So exact financial position of the business can be ascertained by preparing the balance sheet. So under income statement will come across the profit or loss of the business, but under the balance sheet will come across the financial position, that is the total assets and liabilities of the business. So hope you are clear about this concept. Moving on to the next, there are 2 financial statements. So these 2 financial statements, that is income statement and balance sheet, are called as what? Final accounts. So what it is called as? The 2 important financial statements, that is trading profit and loss account and balance sheet, is called as what? Final accounts. So in modern times, in addition to the aforesaid 2 basic financial statement, so along with that 2 basic financial statement, that is income statement, it is also called as trading profit and loss account, and position statement, that is your balance sheet. Along with that, in the modern days, there are few more financial statements that are prepared. That is, you have the other statements, namely statement of retained earnings and cash flow statement. So this you will learn in the second PUC, that is about your statement of cash flow statement or ratio analysis. So these are the basic financial statements of the company. So that you will learn later. So in this chapter, you are going to learn the two important basic financial statement, that is trading profit and loss account and balance sheet of the firm. Okay, so hope you are clear about meaning of financial statements. Now coming to definition of financial statement, in the words of John N. Mayer, the financial statement provides a summary of the accounts of the business enterprise. Why it is called as summary of the business enterprise? Because at the end of the financial year, so we are not going to take that bulk transactions. So we are going to take only the summary of the transaction that have taken place throughout the year. So what is this financial statement? It is a summary of the transactions or the business transactions that have taken place throughout the year. The balance sheet reflecting the assets, liabilities and capital as on certain date. So what that summary, so what is that financial statement contains? It contains assets, liabilities and capital of the business, showing the results of operation during the accounting period. So during that particular accounting period, whatever the transaction that have taken place throughout the year, so it will be presented in a summary form which contains assets, liabilities and capital of the business. So that was this definition of financial statement. So hope you are clear about it. Now moving on to the next part, objectives of preparing financial statement. So what are the main objectives? Why we have to prepare the financial statement? Of course, now you would be knowing, after knowing the meaning as well as definition of financial statement, it would be easy to analyze what would be the objectives of financial statement. So coming to the first one, to present a true and fair view of the financial performance, that is profit or loss of the business. So by preparing what, we will come to know the exact profit or loss of the business by preparing the income statement, that is statement of trading profit and loss account. By preparing that statement, we'll come to know the exact profit or loss of the firm. Next, second one is to present the true and fair view of financial position. So by preparing what, will come to know the financial position of the business by preparing the balance sheet, where we will come across or will come to know about the assets and liabilities of the business. So under income statement, we'll come to know the profit or loss of the business. By preparing the balance sheet or position statement, we'll come to know the assets and liabilities of the business. So hope you are clear about it. These are the two main objectives of financial statement. So the first one is as well as fair view of financial position. That is, by preparing the balance sheet, you will come to know the assets and liability of the business. Other one is in order to know the financial performance, that is whether the business is in profit or loss. By preparing income statement, we will come to know the financial performance of the business. So these are the two main objectives of preparing financial statements. Now moving on to the next part, users. Now let us see who are the users of financial statement. So in the sense, there are a number of users who are inside the organization as well as outside the organization who will be eagerly waiting to know the financial position of the business. So the financial position as well as financial performance can be ascertained by preparing the financial statements. Now let us see who are these users and whether they are the internal users and external users. Both are interested in knowing the financial position of the business. So information provided by the financial statement is used by the management. So these are the internal users. Management is an internal users, investors, external user, creditors, external user, employees, internal user, government, external user. So there are a number of internal as well as external users who will be eagerly waiting to know the financial position as well as financial performance, that is profit or loss of the business organization, because they are dependent upon the organization. For example, employees being working there, He also wanted to know about the financial position, because whether my salary gets increased or not. So whether I'll get the bonus. So such type of expectations will be there. In the same way, being the investor, external user. So he is the investor and he wants to know whatever the amount he has invested into the business. So what would be the return? If the profit is more, of course he gets more rate of return. If the profit is less, he gets a less rate of return. So he also wanted to know the financial position of the business. In the same way, creditors, shareholders, so management, so everybody wants to know the financial position of the business. Now coming to the first one, so the utility of the financial statement upon the different parties is as follows. So we have explained each and every party here, that is who are the internal as well as external users who wanted to know the financial performance and financial position. Coming to the first one, that is management. So the financial statement helps the management in assessing the profitability of various activities and various departments. Of course, being the management, so management wants to know what is the actual activity that is taking place in the business and whether the business is in a profitable way or not. So if not, what are the measures that can be taken in order to improve that activity so that our profitability level can be increased. So here, management wants to know the profitability of various activities and various departments. So which department is working properly, where the profitability level is increasing or where they are lacking behind. So such type of decisions can be taken only if we know the financial position as well as financial performance of the business through the financial statements. So on the basis, the management can review the progress of the business and take decisions in controlling the non-profitable activities. So being a management, so they can take a proper measure. So which activity has to be controlled if it is running in a non-profitable manner. So or where the importance has to be given. What are the management decisions can be taken in order to improve the activity of the business so the profit can be maximized. So these are that is management is also one of the internal user who wants to know about the financial statements. Next is investors. Of course, I have told you, being an investor, so he has invested into the business and of course he wanted to know whether what is the return he can expect in the future. If the business is running in a profitable way, of course he gets high rate of return, and if the business is in loss, then he gets less rate of return. So investors, they can access the short-term and long-term financial soundness. So how financially strong the business organization is and earning capacity of the business with the help of the financial statements. So how strong or how financially strong the business organization is can be ascertained only through the help of financial statement, because it is ascertained at the or it is prepared at the end of the financial year, where we will come across the exact financial performance, that is profit or loss of the firm and financial position of the business. So being an investor, he can come to know what is the financial soundness of the business. They can also study the trends of sales, trends of profit, shortcomings and prospectus of future growth of the enterprise. So based on the current profitability, so they can expect the future profitability also, where the investment can also be raised. So investment will always be based on detailed study about the organization where they are going to invest. So being an investor, so he decides whether the business is in a profitable manner or not. If it is in a profitable manner, of course the investment also increases. So that is about your investors. Next, short-term creditors. Of course, when we hear the word business, of course, there is also a creditors who are involved in the business activities. Okay, so it may be a short-term creditors or long-term creditors. Now, short-term creditors is one of the user who wanted to know about the financial statement. So, on the basis of the financial statement, they access whether the enterprise will be able to pay their debts. Of course, being a businessman, so he will not have that much amount of money. So where a necessity comes where he has to borrow from the outsiders. Now, when he borrows from the outsiders, of course, the creditors are created. So creditor is a person to whom the business have to owe money in the future. So they are all termed as creditors. Now, being a short-term creditor, so they also wants to know the financial position thinking that whether the business is in a condition to repay their debt or not. So that is short-term debt or not. For that reason, they wanted to know the financial statement when they fall due and may decide to extend, maintain or restrict the credit allowed to the enterprise. So based on the profitability, so what is the credit period has to be given, or whether the business is in a position to repay their debt or not. For that reason, they wanted to know the financial statement. Next, long-term creditors. So long-term creditors normally, suppose if the financial position is proper, of course long-term creditors will remain for a longer period of time. So if the business runs in a profitable manner, of course the creditors will retain in the business for a longer period of time. So on the basis of the financial statement, they may determine whether the enterprise will be able to repay the interest consistently. So if the profitability is proper or if the profitability is more, then it is always understood that creditors will have a high rate of return. At the same time, whatever the amount what they have paid, so it will be repaid back in time along with the return what they are expecting. So here also long-term creditors wants to know whether whatever the amount which is being given to the organization, whether it will be repaid in time, and whatever the return what they expect, whether they'll get it or not. Next, whether the company will be able to pay their debts when due. So whether the business is in a position to repay the debts on the due date, or whether we have to extend the credit period. So based on that, they will take the decisions. So on the basis, they may also decide to extend. So I have already told you, maintain or restrict the loans extended to the enterprise. Or if the financial worthiness of the company is not proper, then the creditors will decide, or they will quit the business organization, or they will stop funding the business organization. So in that way, they wanted to know the financial position of the business. Next is one of the internal users here is employees and trade unions. Of course, being an employee or a trade union who works inside the organization, they also wanted to know, because whether we will get an increment in the next year based on the profitability of the business, or any bonus will be given, or any incentives will be given. So that will be decided by the employees as well as trade unions. So on the basis of the financial statements, they can judge as how much bonus and increase in their wages is possible from the profits of the enterprise. Suppose if the business is not in a good condition, then of course they can't expect the increment or the extra bonus what they are supposed to get. So based on that also, this is one of the internal user who wanted to know about the financial statement. Next is government. Of course, business organization plays a very important role in the development of the economy. So where government also wanted to know what is the financial position of the business, government uses the financial statements to study the profit margin. So what is the profit margin? So when you take in terms of the economy, what is the position in the market? What is the business position in the market? So profit margin of various industries to announce or withdraw various concessions and increase or decrease in excise duty. So based on the profitability of the organization, based on the development of the organization or the role of business in terms of development of the economy, so government also can take various measures. So or various decisions can be taken based on the profitability of the business. Next is taxation authority. Of course, in order to levy the tax, so taxation authority also wanted to know the financial position of the business. So they use the financial statement for the purpose of assessment of income tax, sales tax, etc. So I have told you, in order to levy various types of taxes, so this tax authority also wanted to know the financial position. Next, other users such as trade associations, consumer organizations, researchers, etc. So these are the few users who wanted to know about the financial position of the business. So these are about the users of financial statements. Now moving on to the next concept, let us discuss about the income statement. So which are the income statements? That is trading, profit and loss account are the basic income statement which is prepared under the financial statements. So it is divided into two parts. So the first part is called as what? Trading account. So your income statement is divided into two parts, that is trading account and the next half will be what? Profit and loss account. So the first part is called a trading account. It shows the gross profit or gross loss of the business. So why we are preparing this trading account? So income statement means what? It has been divided into two parts. Trading account, profit and loss account. So trading account is the first part of your income statement which is prepared in order to know the gross loss of the business. And the second part is what? Profit and loss account. So why it is prepared? In order to know the net profit or net loss of the business. So hope you are clear about it. Income statement is divided into two parts, that is trading account which is prepared in order to know the gross profit or gross loss of the business, and the second part is profit and loss account which is prepared in order to know the net profit or net loss of the business organization. So hope you are clear about it, income statement. So in my next session, we shall discuss about the income statement in detail, where we shall prepare your first part, that is your trading account. So we shall see what is the meaning of trading account, need and importance of trading account, format of trading account, and we shall solve few problems on trading account. So this is an important question for 6 marks, where they will ask you to prepare trading account and find out the gross profit of the firm. These are the concepts we are going to discuss in the next session. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.